because we're getting so many investors on all the different awesome deals that we have, so I want to make sure that you guys have a point of contact. So she's here, Anne is here, and you'll slowly be able to meet her. So when you email info at Self Storage Fund of America, Anne will be the one that helps and answers your questions and things like that. Now, remember that you can always schedule time with me. If you want to meet with me after this pitch, you listen to me and you're like, okay, I want to like meet Stacy and just talk to her one-on-one, then you can always just email us, and I can fit some time to do that as well too. Okay. So info at selfstoragefundofamerica.com is the email. And I want to put into the chat as well too the portal, fundofamerica.com is that as well. So we're going to go over that. So I appreciate everybody hopping on, and we'll just give you a quick update of the facility, what's going of the fund and what's going on. And then you guys can ask any questions along the way. I'm going to go over the new financial model that we have. So Adam is our fund manager, and eventually if you decide to invest with us, you'll meet him as well. And he put together like totally awesome financial model where you guys can actually just put your numbers in, and it will show you how much money you're going to make. So so we're working on I'm going to go over that and show that to you as well too. Good. And then if along the way, if you have any questions, just unmute yourself and you can ask as well. Okay. All right. So let me share my screen, and let me get into the presentation, and then I'm going to get into the website as well too. Okay, so you have the link to the portal, so you can come here. If you're not an investor already, you can come here, and you want to make sure that you click access the PPM. And this is where you're going to get access to the PPM. And if you're a new investor, the PPM essentially is just like the Bible of the fund. I'm going to go over that here in just a second. But that's the first thing that you want to do is just come to the website and click access to PPM, create an account. And then from there, you can log in, and then you can get access there. Okay, good. And also inside of the portal is this presentation, and actually it's under the supporting under documents right here. So click on documents and click on supporting documents. And this is where you're going to find all the documents that I'm going to go over today and kind of show you what's happening. And then from there, we're going to go over this. This is the investor presentation. It's like the slide deck. Okay, right here. So that's this. If you wanted to look through it afterwards, you could do that as well. So I'll go through all these documents here and just throughout the pitch. So, okay. So thank you for coming and listening. And so just real quick, just to give you guys example of what we're doing. So my husband and I have been investing in real estate since 2011. So over 10 years now. And we started investing in self-storage in 2016. And we bought our very first facility in 2016, and we haven't looked back. All right. And so we have now, we have 11 facilities that we own ourselves. And then we have the 2 facilities in the fund, right? And we do have a 1 facility under contract under a different syndication that we're working on. And then we have 1 facility under contract in this fund here. Okay, and I'll go over that deal today a little bit and just kind of show you a little bit about it. Okay, so and then yeah, so we set up our company it's find them, fund them, run them. And under find them, we have like virtual assistants that work for us. And what they do is they just call owners. They not only call owners for me, but they also call owners for all of my students. And I typically buy in Georgia, Florida, and this fund is for really the South, anywhere in the Southeast. It says the Southeast in Texas, but most likely will only use this fund for Florida and Georgia properties. And because we just find so many good deals there, honestly. There's no reason to really go way out because you just, you can find so many really good deals there. And we buy mismanaged facilities. So this fund is set up to buy mismanaged facilities. What is a mismanaged facility? A mismanaged facility is a facility that is not producing the income that it should be producing. And there's a lot of different ways to describe that. But we buy either severely like distraught, facilities, which is like the one that we just bought. It's called Max, which it's actually now called Mission Self Storage because we bought it, but it was Max, and it was in Macon, and it's actually the ugliest storage facility in the city. And the owner really he struggled very hard to figure out how to run the thing, did a very, very poor job. And but there's like a lot of opportunities, so you just need really the right person to come in, clean it up, stabilize it. And he didn't live in the area, and he just didn't manage it properly, and and it just ran it to the ground. And so we bought that. So that's a severely mismanaged facility. And then we also buy properties that are just not producing what they should be producing. So in the Blairsville one, which is the first one that we bought, the owner had not raised rents in 15 years. And so he was charging $20 a month for 10 by 10s. And the market called for $100 a month. Right. And he had owned that property for 15 years, and he had never raised rents, and he didn't want to raise rents because it was free and clear. He was making 10 grand a month. I mean, he was making like almost 120 grand a year, I think like 115 grand a year. But it just wasn't making what it should be making. He should be making like $20,000 to $25,000 a month on that property. So a lot of opportunity there. And then on those types of properties where you have to come in and raise the rates considerably, from $20 a month to $100 a month, or he was charging for a 10 by 30, he was charging $98 a month, and the market calls for $288 a month. And so when you come in and raise the rents, so much, essentially what you do is just piss everybody off, right? So we pissed a lot of people off, and we lost we were full, and we're down to like 70%. But then we also gained like another 10 new tenants in the past month. We only owned the property for a little bit over a month. We got 10 new, or I guess since August, so September, October, so 2 months, and we gained 10 new tenants in that time frame, which is actually about average. Honestly, you get like a new tenant every week. And so really it's just trying to find tenants that are willing to pay what you want to charge. Right? And so that just takes time and effort. Now, these types of properties, banks just don't want to fund these types of properties. They don't want to, they want like income producing properties, right? They want to have like, good, strong properties. But what we do is we come in and we buy all the ugly ones, right? So that's what the purpose of the fund is for, is to come in and buy severely mismanaged facilities. And for you as the investor to invest with us, but give us time to stabilize those properties. On a property that's producing income, we ask for 6 to 9 months to be able to like stabilize it. Like, so for instance, the Blairsville one, we should be able to give a distribution in the third quarter. But in like the Macon one, I mean, it's 25,000 square feet, 191 units on 6 acres, and it's making $1,000 a month. And we bought it for $375,000. We got a really good deal on it. But I mean, it's just going to take us like a couple of years to get that thing up and running and making some money. So we ask for time and patience on these types of deals. So this is the type of fund that, like, if you want something, like if you need money like right now in the first quarter for a distribution, then this is not going to be like, the perfect fund for you. All right. There's a lot of like super nice, good funds out there that are like primary market, with like, 5 cap and 4 caps and stuff like this. But typically we're buying something at like a -2 cap and we're taking it to like a 25% cap rate. And, so we'll sell it at like a 7 cap. That's kind of what we do. Okay. Just to give everybody an idea of kind of how the numbers work. So that is what we do best. That's what my husband does best. So it's find them, fund them, run them. So find them is like my VAs calling and talking to owners and putting offers in directly to owners, because that's how you get the best deals. All right. And there's a lot of owners out there that they just want to work with like a regular person. They don't want to work with a realtor or a broker, right? They just want to work with like a regular person. So me and my husband, we appease to those type of people. And then there's the fund them. And the fund them part obviously is this, like we're raising money all the time. And in fact, I've been, investing in real estate since, like I said, 2011, and I'm 100% privately funded. So, so raising money for me, this is not like new. And so that's my job, is to like pitch and to talk to investors and to, to take care of you guys. And then my husband is the run them part, and he has a whole team underneath him that, he's got Bonnie, who's worked for 7 years with us, and she's our operations manager. And then underneath her really is like the whole team. It's like we've got marketing people, we've got a marketing person, we've got boots on the ground people, phone people. We got like a whole group of people that kind of help us manage all of the facilities that we have, because we have about 1,300 doors. And so that really takes kind of a whole group of people to manage all of them. And that management company is the management company that not only manages our personal facilities, but also the fund facilities as well too. Okay. So that's really kind of how it's set up. Find them, fund them, run them. And that's basically what these slides are saying. And let's see. Okay, so the offering. So the offering is, it's a capital raise of $7.875 million with the option to expand up to 10 million. Okay. And and the goal is from now until the end of September, which is when the offering closes, to just raise as much money as we possibly can and then buy as many storage facilities as we can. And so the targeted IRR is 19%. I will not put anything into the fund that's less than that, because essentially there are hurdles. And if I don't meet those hurdles, then I don't get paid as well too, right? So everything that we have, all the facilities, the first one that we have is Blairsville, is a 20% IRR. And the second one that we have is a 33% IRR. So Max is a 33% IRR. So together, both of those right now are at a 24% IRR. So just so you know, we're well above the 19% right now. And so, and then we'll have quarterly meetings with the investors and kind of show you as we add more units, add more facilities, and then change the model and update the model as we move, throughout the next couple of years, like how that'll look. Okay. But the hold period is a 5-year hold. All right. So just keep that in mind. We're running our numbers based on 5 years. And the preferred return is 10%. Right. So it's our very first fund. So we really just kind of wanted to be generous and, really kind of be competitive, honestly, because, there's a lot of funds out there that you can put your money in. So, we are offering a 10% preferred return, and our hurdle is, we have 2 hurdles. The first one, it's an 80-20 split, and that is up to 15% after the preferred return. We have a chart. I'll go over this in just a second. And then the second one, the second hurdle is a 75-25 split, and that's after the 15% IRR. Okay. It's a quarterly distributions, and we are contributing. It's a 4% contribution from us as the co-invest, me and my husband. And then the promote is again, 20% after the 10% preferred return, up to 15% IRR distributions, and 25% thereafter. It's a minimum investment of 25,000, and it's only for this fund is only for accredited investors. And finally, this is the chart that I wanted to get to. So the preferred return is 10%. If we only make 10%, then the split is 96-4. So 4% to us because we're the co-invest, and 96% to you as the investors, and no promote. Once we go above 10% up to 15%, then it's a 76-4-20 split. So 76% to the investors, 4% to us for co-investing, and 20% for the promote. And then thereafter, it's a 71-4-25% split. So 71% to you guys, 4% to the co-invest, and 25% to us as the promote. Okay, so that's the hurdle. I'll show you in the financial model kind of how that looks. All right, and then finally, fees. We tried to have like minimum fees, so we really have no minimal fees at all. There's a 0.625% fee, management fee, which is an annual fee. And then there's an acquisitions fee of 0.50%, which is a one-time fee. And other than that, there's no refinance or disposition fees. And on top of that, there is development fees just in case we go out and build more units. Typically, we don't do this because this is just not what we do. But just in case if there's any type of construction or anything, then there's some fees for that. Okay. And then as you go through the slide deck, you can just you guys can always go and look through this, but there's kind of our marketing strategies, which I talked about, right? I talked about all this in the beginning. You can go through all that. There's also some case studies. Here's some pictures of some facilities. And then here's me and my husband. Okay. So this presentation is in the portal right here under investor presentation, which is under supporting docs, which is under documents. Okay. Also under supporting docs is the quarterly report and the replay of the quarterly report meeting right here. Okay. So if you wanted to, you can download this file if you wanted to see the quarterly report. It was our very first quarterly report, which was the Q3 report, and we had bought Blairsville and closed on it. And so we were kind of reporting on that is what we were doing. And then there's the replay of that. Inside this replay as well, too, is Adam going over the financial model. So if you want to have a video of of Adam going over it, that's in there as well, too. Okay. And let's see what else. Okay, so that is the offering. Let's see. And now let me get into the portal. So you're going to come into the portal, and you're going to get your account created, right? And you're going to get access to the PPM, and the PPM is right here. It says read the PPM, view PPM. Okay. And this is where you can come in and actually view the PPM, look at it, look at all the rules and regulations, and everything's here. It's 102 pages. The operating agreement is there. All of our history of all the properties that we've bought are all in there. All the rules and regulations of the PPM are all here. So you could go through and check all that out if you want to take a look at it. Okay. And once you take a look at it and you're like, yes, I want to do this, right? Then you need to upgrade to the investor account. This is where it'll ask you, would you like to upgrade to become an investor? And that means that you're going to get access to the subscription. And the subscription is basically right here. And the subscription is just like the contract, right? So between you and the fund, you and the fund. There's 3 different types of subscriptions. There's the individual, which is like you or you and a spouse. And then the custodian is if you wanted a loan from your 401k or IRA or something like this. And then there's the entity, which is from a company to the fund. All right, so you can pick whichever one that you want to do. And then that would be the subscription. Inside the subscription as well is where you put all your banking information. And, and we need to definitely have that because we want to be able to pay you, right? So if you don't give us your bank information, we're not going to be able to do that, right? So make sure you put that in there as well. And then the accreditation letter is the next step. So we're in step 2 right now. So once you fill this out, oh yeah, I was going to tell you too, once you click on this, this is going to take you to DocuSign. And so everything is completely electronic as well too. So you just fill this in and it's a whole bunch of just like clicks, and then you type in your name and information and stuff. So you go through the portal that way, just so you know. And yeah, so then you want to also, this is where you're going to upload your accreditation letter, something for proof of, with proof of income that you have enough income to be an accredited investor. Okay, so and an accredited investor is somebody that has a net worth of $1 million or more, or makes $200,000 or $300,000, depending on if you're married or not, on an annual basis. All right, so you just have to show proof of that somewhere. Okay. And then your wire instructions are here. So you can click on that and then it'll show you how you can wire the money over. Okay, so easy as 1, 2, 3 right there. Okay, and then down here is where you can see, like, here's some documents. Here's the investor presentation. You can click on this as well too. So it's a quick links. And then also this is where you, this is our news, right? So we just closed on the facility number 2. So we posted out about that. So you can kind of come get an idea about this. And then this is where we list our assets here. I haven't put the one from 2 weeks ago. I haven't put that one yet. I'm going to practice with Anne. She's going to practice and she's going to do that. Okay. So I've been waiting for that. So we'll get that all up to date. So that's basically the portal. Okay, and then let me get back into the documents here, and then I'm going to just I'll just go over, like, I'll go over Max. Let's see, Max self-storage executive summary, just to give you an idea of kind of what we just bought a couple of weeks ago. This is the one that I told you about, severely mismanaged, and we picked it. It's 191 units, and we picked it up for $375,000. So this is it. It's in Macon. It's kind of like in the Macon area. Let me see if I could get the it's Dawsonville, but Dawsonville is like it's like a suburb of Macon. So you can see the demographics here. And should we pull this down? Yeah, so you could see the, like, within 5 miles there's like a 38,000 people, within 7 miles there's 80,000, and with like 10 miles there's 100,000. So it's very populated. The town of Macon has 150,000 people. So this would be considered a secondary market, right? So very, very good market. We just happened to pick up the ugliest storage facility in the area. And this facility right here is actually listed for $1.8 million on Craigslist right now. So I know we could at least get that, right? I mean, it's just as big. And then our property is right here. It's a little triangle. But it's 2 lots, and this lot is actually included, right? So it's actually 6 acres. There's an access road that you can get in through here to come into the back if you wanted to. But it's just neat if somebody wanted to add on and build, perfect location to add on, build more storage units here. We're going to be stabilizing this property. It's going to take us a couple of years to stabilize it because it's a mess. But and then also you can't really tell, but right here, and so I can zoom in a little bit. Yeah, this little area right here, that's like an empty area where we're going to do some parking. Once we get it cleaned up, we'll definitely do parking right here. It's completely fenced in. There's actually a security system. The owner he spent a lot of money on this facility, but he did not spend any money on marketing it. And he painted it, and it's just like horrible. He just spent his money on all the wrong things. So this is here. So this is like the buildings here. There's a warehouse. There's a commercial warehouse that you can actually make money on. That's like full of somebody's crap that we need to get cleaned out. And then there is like parking right here as well too. And then this second lot is the one that's included. This right here is about 2 acres. And then this right here is about 4 acres. Okay, so it's total about 6 acres right there. Okay, there's one competition. There's a competitor right here, and then there's like 2 others like over in this area. And so we've been to all the competitors. My husband actually tried to go into the offices and rent some units from the competitors. So he's driven all up and down this. I mean, it just needs a lot of work, is really what it is. It needs to be painted and like cleaned out and stuff. So he's going to get onto that. here in the next week. Actually, he's gonna go this week down there and start working. He's been down there a couple of times in the last couple of weeks trying to get like, the utilities and like get everything all set up and stuff. So and try to figure out the cameras. He can actually monitor the facility from the cameras from his phone. Because like I said, the owner spent like a lot of money on security. It's like crazy. He has like the nicest keypad system and everything, but just didn't spend any money on marketing. Okay, so this is the numbers, right? It's only making 14,000 a year. It's only has 92 units that are usable, and the rest of the units are not usable. So that means that like walls are down or doors are broken or something like this. So we're going to have to fix a lot of units, you can see. And then so about, and then also this 14,000, it's almost 15,000 square feet and 92 units is what can be used. So we're going to really focus on trying to get all that cleaned up, looking good, painted, and then we'll be able to get this 88% vacancy to 8%. So you can see it's 66 cents a square foot, and it should be at 78 cents a square foot. And you can see, like I said, it's a -2 cap rate, and we're going to be taking it to a 24% cap rate. So we bought it for $375,000. We put $200,000 of CapEx in, which is going to clean it up, paint it, and get some doors and things like that. And then it's going to be valued at around $2 million plus, honestly. I mean, honestly, that land is also worth a lot of money too, but we just kind of ran our numbers. We said 2 million. I mean, that's what the competition was on the market for, like about 1.8. So I figure like 2 million should be a good number for this. Also, another thing too, is that we ran our numbers at 0.78 cents per square foot. And that area calls for 85 cents a square foot. So, we ran our numbers less as well, just to be conservative, so that's kind of what it looks like. Yeah, as you can see, on -11% cap rates. I'm sorry, not cap rates, cash on cash return, but we'll get it over here to 24% cash on cash return. So it's a 24% cash on cash return is what it is. I mean, that's really good. That's like really good. All right, so that's kind of the deal, that deal. Let me see. I'm going to show you guys Carrollton. This is the one that we have under contract. So I'm raising money for this deal. I need money for this deal, y'all. We're going to be closing at the end of January. And so I'm hoping that I can convince you guys to give me some money, because this is also a very good deal. And let me see if I can get the deal analyzer. Let me show you some pictures of it. Let me see. All right, this is it. Sorry, this is the wrong deal anyway. There it is. Yeah. Okay, so I got so much stuff open here. Okay, so this is, I think here's the executive summary. Actually, I need to put this into the I'm going to download this so I remember to put this into the supporting docs. I keep forgetting to do that. So here is this property. It's got this huge big warehouse, and it's got all this like parking here. And it's got a whole bunch of storage as well too. So it's a huge big lot, right? Here's the storage. Here's the warehouse, and here's the parking over here. Nice gate. Okay, so it's a pretty nice looking facility. It needs to be power washed, honestly. And this building needs some work. He's renting these doors out for like $600 each. It's like way below market value. And honestly, the truth is like, I want to like get all these people out and convert this. I would really love to convert this to climate control. This is the perfect facility for climate control. So we'll see if we can raise enough money to do that. Makes good money the way that it is right now. We ran the numbers as is right now, but it would be great if we could convert this to climate control, because this is a perfect building for it. So that's what it looks like here. All right, so it's not bad. It's not a bad looking facility. I mean, this one needs a little bit of work. Definitely, it needs to get cleaned up. But that's what it looks like. Okay, just like this, a little bit of work, but not too much. And yeah, so it's in Carrollton, which the population is 27,000. Actually, Carrollton is a suburb of Atlanta. I mean, it's really considered, I would consider it like secondary market, if not secondary primary market. I mean, look at the growth rate. I mean, this area is just like growing, and there's so much opportunity in this area too, and it's just booming and stuff. So it's very, very good area to be in. And we have a facility like maybe 20 to 30 minutes away. So it's like we're already in this area, so it's a perfect location for us as well too. We've got several facilities right in this area. Actually, let me show you where it is. Maps. Carrollton, Georgia. Okay. So this is Carrollton. Okay. This is us. Let me do so here's Blairsville. So this is the one that we just picked up for the fund. And then here's Macon, right? So this is where our snacks is that we just bought. And there's Carrollton. Okay. Now, Miss Lillian self-storage, we've got a Noonan facility. So Noonan is right there. And then we also have Fayetteville, and we have Fairburn right here. And we also have Franklin. So we're like right in this area. So for us, like perfect location to manage it. Okay. So for adding is not going to be that big of a deal. Okay, so this is what it looks like overhead. You could see, yeah, so here's a lot of storage. Here's climate control. Here's some more units. Here's this facility. Here's this big warehouse, and here's even some space for parking. I mean, also you could park right here as well. I mean, there's a lot of stuff going on that you could do. A lot of opportunity here for sure. But we just ran the numbers as is what we did. Okay. And that's where it's located. Here's the property itself. And let's see. Okay. So let's go to the deal analyzer. Okay, so it's so the purchase price is $1.4 million for this. It's 175 units. 175. It's 25, almost 26,000 square feet. It's making $150,000 a year already. It's at 71 cents a square foot, but the competition is at 95 cents a square foot. So it's a huge jump in the competition. That is the thing. We looked at all facilities with less than a 2 mile, like around 2 miles or less, right? And kind of looked at all the competition. And you can see here that's coming out to like 85, $1.30, and 133, 144, 206, and 268, right? Whereas the unit mix, let me see if it shows up. No, it doesn't show up here. The unit mix average price per square foot comes up to 95 cents a square foot. That's really what it comes out to. So as you can see, we're buying it at what it's worth, which is $1.4 million. But we're going to increase the price per square foot to 95 cents. That's all we're doing, just running the numbers on the increase, and it comes out to a $3.1 million value. So we're taking it from a 7 cap to a 16 cap. This facility is exactly like the Blairsville one, almost exactly like the Blairsville. Okay. It's a bigger, Blairsville is only 135 units, and this is 175. So that's why we're paying a little bit more. But it's going to be worth right at $1, a square foot. I mean, as we hold on to this and stuff, we'll probably get up there, but it's a very, very good area. So we're buying it at a 7 cap, and then we're taking it to a 16 cap. Okay. So that is the next facility that I'm raising money for. So I need $1.4 million. And that's what I'm asking for. I'm hoping that you guys will help me to raise that from now until the end of January. We close in January. That is that deal. Okay. Anything else? Did I forget anything? Oh yeah, I want to go over the financial model. Okay, real fast. So hang on for just a few with me, and I'm going to do that. Okay. So let me share new share. Yeah, right here. This is, I'll show you how to find this. This is also inside the portal. Okay. And so yeah, so when you open up the financial model, it's going to have on the very first tab, it's going to have the investor cash flow model. And that's where you're going to be able to put in your investment amount, whatever amount you want to put in. So, 25 or 50 or 100 grand. And then you put in the date that you're going to put that money in. Okay. And then here is where you can turn these on or off, essentially turn these on or off. So let's just say that like Mission Storage, we refi this out, and Macon we sell, and Able we refi out. And then acquisitions 4, 5, 6, 7, 8, as many as we can get until next year, then we can, either refi those out or we can sell those. All right. So we really are running our numbers on either refining it or selling it. It really just depends on the market, what we do. And if you look at the financial model, we are running our numbers at for the refi, which is in each of these tabs, the Blairsville, the Macon, or the Able. I think this is the 1.4 million, right? I want to just make sure. 1.6. Okay, so this one still has this. Oh yeah, 1.6. We'll change. Actually, we need to change this to 1.4 because I got the price dropped. So I want to change this one to 1.4. But so Macon, but like what we'll do, like let's just say on Blairsville, we refi this out to like here it is at the cap rate is 7. The interest rate is 7%, right? And in 18 and month 18, essentially, we refi this out. That's what we're running our numbers on, just so everybody knows. Here's our management fee, here's the amortization. So once we refi this out, we're going to get like 1.6 million dollars, not 1.6 million. Yeah, $1.6 million back, and then those proceeds will just get distributed to the investors. Okay, and then in Macon, we ran the numbers here at 18 months, right? And then at a 7% interest rate, and that at the refi, we're getting $1.3 million. All right, 1.29, whatever. So this is where you can look at if we refi them out, right? Here on this tab, we could say like yes, we're going to refi this one out, or Able, we're not going to refi out. And then you could change it to 18 months or 24 months. Let's just say like we do 24 months, right? On the Macon one, right? So as we go through each of the properties, right, we could update what interest rate we actually get. Like just to say Macon, we get like, a 6% interest rate in 24 months. Okay, or something like this. So then we can, as you change these numbers, then the whole entire like deal analyzer changes. And then it shows you on $25,000, like how much you're going to make over the 5 years. Okay, so you'll make 68 grand over this time frame. Okay, and based on these inputs right here. So if obviously this is a fund where we're raising money and we're buying a whole bunch of different facilities, and the outcome of every facility is going to be different. So that's why on this input, you can come in and change as we go. You can change what really actually happens. And so obviously, we'll be able to come in and do this. Like right now, we're running everything to where we refi in 18 months. That's really kind of what the sheet calls for, and it's at 7%. So right now, you don't really have to change anything. But as we go along over the course of the next, year or two, you could come in and you could update all these. And you could really get like fine-tuned to see what you're making, how the fund is doing, how your money is doing. Okay, so you could say like if you came in and did 100 grand, right, and you invested it by the end of this month, as of right now, you're making this much money. It shows you your distributions. Your first distribution is going to be here, and this is what you're going to be making over the course of every single month, right? This is how it's looking, right? And then obviously, things are going to change, and so we'll come in and we'll update the numbers, and we'll update the historicals and I mean, not the historical because it's the historical, but if we need to update anything here, we would update it. We'd come in and maybe update these numbers if we needed to, wherever we need to come and change it. And then that obviously is going to change the numbers. But this is like, this deal analyzer is not just this the financial model is showing you as is right now the 3 deals. We need to change this to 1.4 because we're getting that lowered. But other than that, everything else is correct on this. Okay. And then you'll be able to run your numbers and look at it. And like Luis, I think this is a very good, accurate financial model to give you an idea of kind of how much you could make. Obviously nothing's guaranteed, but this is going to give you an idea of kind of where we're at, and this includes your 10% preferred return, and it will, show you on a monthly basis what you're going to be making. Does that make sense to everybody? Any questions on the financial model or on the offering? So that is in the supporting documents, that financial model. And then also there's going to be a video. We're editing it right now, but there's going to be a video of Adam going over the financial model because he's better at it because he's the one that did it, right? But so you could watch that. It's like 20 minutes long, and he's explaining like the whole model as well too. Okay, so if you wanted to watch that, you could watch that. Okay. And that's really it. I see some questions here. I'm seeing dates in March 2022. So the fund is accepting investors. Yes. So we started accepting investors in the end of February, and it goes till the end of September 2023. That's when our offering is. A really 18-month offering is what it is. Okay. So so we are accepting investors right now, and we're trying to raise money for the Carrollton facility, which is going to be the $1.4 million. And we need to close by the end of January. So any help would be greatly appreciated on that. Okay. Okay, good. What else? Thoughts, questions? Okay, so I do also like one-on-one meetings. So if you guys want to talk to me directly, you're like, look, I need to talk to you, Stacey. I want to ask you some questions and stuff. Then just email us at the info. I put that chat. So that email there, info@selfstoragefundofamerica.com, and then we'll give you access to our calendar, my calendar, and then you can just pick a time, and then we could just meet too. And then we do quarterly meetings. So the next one will be probably like maybe February. We just had one in November, so February or March we'll meet again, and we'll go over kind of how the models, how the fund is doing, and then we'll update the model, and then we'll put the new model into to the fund as well, to the portal. Anybody else? Any thoughts? Oh goodness, I got one more question here. Hang on. I love the spreadsheet. Did you create it? Oh yeah, Scott. Hey Scott. Yes, I didn't create that actually. Actually the deal analyzer, Pete, my husband, created, which is the analyzer that we use to run all of our numbers. And then the model is what Adam, our fund manager, created for the model, for all the syndications that we do and all the things like that. Okay. Okay, so how do you become an accredited investor? So essentially, an accredited investor is really just being able to show proof of income, $1 million of net worth, or 200,000 if you're single, or 300,000 if you're married and filed jointly on your annual income. And there is a company called verifyinvestor.com, Verify Investor, and they can essentially give you a proof of income letter. But the truth is that a lot of people just send over their accounting information, tax returns. So you could always talk to Adam, my fund manager, and say, look, I can show you this. Does this qualify as proof of income? Right. And he'll say yes or no or something like that. And we have we have 401ks and IRAs and actually W2s and just whatever they have, is what we show. But that would be the qualifications: $1 million net worth or more, or your income. Okay, good. What else? Any other questions? Okay. All right. Well, I appreciate you guys listening, and hopefully we can do some business together. And I look forward to seeing you in the next session. All right. All right. Take care. Have a good night.